Good morning. It is Friday, October 7th. The big day of the week here, NFP. There's the non-farm payrolls for the U.S. There's the unemployment rate, hourly earnings. This is all important information for the health of the labor market. All of these things here for the U.S. dollar. Um, so this is a big data event for the week. Investors are waiting to see if the aggressive rate hike cycle from the Fed has had any effect as of yet in the labor market, because everyone is saying that the labor market is still tight, that the economy is strong. So as long as the labor market is still tight, this gives the green light for the Fed to keep raising rates higher. Although even yesterday and before, these Fed speakers have mentioned that they are ready for a certain level of pain in the market. In other words, they are ready to see people start losing jobs, because they want the economy to start going into a small, slight recession in order to bring inflation down. Right? So their primary sole mandate at this point in time is to bring inflation down. And the Fed is resolute in their determination to bring it down, and they're bringing rates up in order to just to restrict the economy. And this involves bringing the unemployment a little bit higher, potentially to 4.5%, 5% potentially. They're ready to see this go up. So, having said that, NFP itself is forecasted to have a slight drop. This slight drop, if it was on target here, this is still positive in my opinion for the economy, because we're still adding some jobs. We got they're forecasting unemployment rate to stay the same, and hourly earnings to be quite similar to previous. So they're not forecasting a terrible data release. They're actually forecasting that the labor market is going to continue to hold up. Now, if the forecast is completely wrong, and for example, we have unemployment rate actually ticks up to 3.8 or 3.7, 3.9, and here instead of 250, it's actually like 100 or something much lower. So if we have negative news, even with hourly earnings, the hourly earnings goes down. If we have negative news on all of these labor market data points, this would mean that the actual economy is getting weaker from the rate hikes, that the rate hikes are already having an impact on the economy. Even though the Fed has anticipated a rise in unemployment rate, and they have mentioned time and time again that they're not going to stop there, they're going to keep raising rates until the end of next year, until the end of the year and beginning of next year, and they're going to keep them up for the entire year. So even though they said this, market psychology is going to take this as positive news, right? Bad news is positive news in this environment, because the Fed would potentially have more reason to pivot. So those are the pivot prayers that would potentially cause a pullback in the markets to eventually set up better prices to return to the macro trend here. But expecting pullback if we have bad data. If we have good data, for example, higher than 250, we've got like 315, 350, we got higher than previous, we got positive data. This potentially stays the same or even drops to 3.6. Hourly earnings also comes out better than expected. Well, this is going to be actually bearish for the economy, because we're going to have the Dow Jones, the US 500, we're going to have all of our risk currencies going down, because this means that the labor market is strong, the economy is strong. The Fed will not pivot, they will continue to raise rates to combat inflation. So we're in a situation here where good news is bad news and bad news is good news. So looking at the US dollar here, we've got a shift now that we can see. We've shifted out of this pullback structure, right? We were creating, actually before this pullback structure, it's important to see, let's just zoom out a little bit here. It's important to see that the US dollar is extremely bullish, right? It has been bullish for over a year, basically throughout this entire monetary policy stance from the Fed as they started to taper and raise interest rates, right? So this right here is the most recent price action here, where we grabbed some liquidity in this order block here and created an aggressive new higher high around 114 and a half right here. So this is multi-decades highs. So this is extremely bullish, right? So we are still within a bull market. And then we started pulling back as buyers start to take profit, sellers jump in at these extremely high prices, and we enter this bear market on the lower time frames, which is just a pullback. As soon as we tested this zone, the zone of liquidity right here, we had an aggressive bounce and small pullback. We'd even come down to double bottom, small pullback, and then another new higher high, breaking past the previous lows. So at this point, it's validating that this pullback structure could be coming to an end, and we may have US dollar domination come back into the scene, and we may get the continued move back to the highs here. So as long as price stays above previous lows, I am anticipating US dollar bulls to keep their strength. Actually, even if they come down to double bottom at this level, this is still a positive sign that we could be entering back into the bullish trend, that this pullback is actually completed. If we end up getting, let's say, some really bad data, right? Some really bad data for the NFP, we may end up rejecting and getting a deeper pullback on the dollar and maybe getting that double bottom at this point. But even if we come to double bottom, I'm still bullish on the US dollar. So the US dollar would have to break below this liquidity zone, back below 109, and for me to see that we're going to get further downside. If not, I am just US dollar bullish based on the fundamentals. Don't fight the Fed. The Fed is raising interest rates, and they will continue to do so for months, for the end of the year, beginning of next year, like I said, and keep them up there. So it's US dollar positive here. Going to be looking for this trend to continue. Now on the equity markets here, we see the volatility index has maintained structure here from printing these new higher highs. We sort of had some weakness as the stock markets had a pullback from lows. We had some weakness, but we are holding above previous levels here, and we're starting to get a stronger bounce. So the VIX is having a little bit of an uptick here as we see more weakness across the board. The US 500, the US stock index, from its new higher high, came to retest basically previous sell side zones, and we're having a consolidation here, and buyers are starting to potentially fade out. If we don't break back above this level, we can end up breaking back below these previous highs and continue the way down. If not, well, then we could potentially get a further pullback if we do break back above to retest this important level, 3,900, before getting the sell-off. So far on the stock market, the pullback structure is holding for the time being, but we do see that this could end up getting faded out if the US dollar bulls continue their run. So let's look quickly at our correlations and currency strength here. So the equities, we see the VIX is a tad bit lower for the day, but we have the US markets, US 30, 500, and 100, basically flat for the day. UK 100 slightly up. It's actually the best performer here today. DAX down slightly. We're basically flat on all of the equities here, as investors are potentially just waiting for the news event, the NFP, to see what they're going to do with the with the data. U.S. dollar is slightly down for the day across all the rest of the currencies, but again, I would call this flat because it's 0.14, 0.2. This is very small drops from where we're going from the new high, intraday high that we printed. This is a slight pullback, so this is nothing significant. JPY also pretty much flat. The pound is actually the strongest so far, but again, it's not enough to say that wow, the pound is really strong today. We're just slightly up. Like, this could easily reverse based on the NFP. So again, we're going to be waiting for NFP to see what sort of what sort of investor sentiment will be set for the day and potentially next week. So starting off with the pound US dollar here, on the daily time frame, we are maintaining our bearish structure as we've had this new low on the higher time frames below this weekly breaker structure. So this low is a weekly low here, where we broke, retested, created a lower high, and then a new aggressive lower low. And then for this pullback, aggressive as it was, never broke back above previous lows, and we're starting to reject this level actually. So on the daily time frames and the higher time frames, we are maintaining bearish structure here. So now zooming into the 4-hour time frame, we do see that we have started to flip our structure, right? So we had, from the lows, we had consecutive bullish price action with new higher highs, higher lows, and this is the most recent higher low that pushed into this higher high. But from this high, we failed to break this higher time frame bearish key level. We actually created a lower high and a new lower low. So it looks like on the 4-hour time frame, we're starting to shift the behavior here as buyers are actually starting to print new lower lows here. But we have to be wary that we never broke past this previous low that brought us into these new higher highs here. So in order to validate further sells, obviously we need to break back below this previous low, and this would confirm pretty plainly that we are moving to the downside. If not, I'm still biased towards US dollar strength and therefore GU sells. So I would be looking for some sells at the retest of this previous low here to continue to the downside, but I'm going to be cautious at this level to see if we're going to break or potentially reject this level. But valid sells would be the retest of this previous low and this previous, it's a pretty significant level in the market here. And we could also potentially come up higher to retest these highs here and get a nice sell as well. Also trying to validate if we can break that level eventually here. So I am still playing the bearish bias here. On the 1-hour time frame, do see that this right here, this was the previous 1-hour order block that led into these lows. So I am liking a potential retest of this zone before getting to sell. So this is a very important level in the market here, but also this one as well. So I'm looking for sells today, and these are the levels that I'm going to be looking at selling. If we even get, if we get the data come out, really bad data, and this fuels some larger pullbacks, I would still be looking to sell if we do get confirmations at this previous level here, to sell like that on the way down. So these are my levels to looking for sells. And obviously if we just straight melt, looking for continuations below that 4-hour demand level 1.1025. So those are my trade ideas for GU. Still data dependent though, but going to validate it with price action on the charts. Now looking at gold, it's very similar in structure. So just zooming out on the daily to have the big picture. We are obviously playing this bearish macro trend here with this consecutive lower lows, lower highs on the daily time frame. And this level right here, around 1727 to 1735, is the previous strong sell side liquidity that brought us into these new lower lows, right? And then from this low here, we've had this aggressive pullback, breaking past this previous high and previous lows here, but we are still struggling at this supply level as we had this buy side move starting to fade out slowly. So on the higher time frames, we are still bearish as long as we stay below this level. And as long as our fundamental confluence for bears on gold is still in play, aka the hawkish Fed, well then we have no reason to buy gold unless we start getting some real signs of pivot and dovishness from the Fed, and we start breaking above the 735 level and get a deeper pullback. But that is not happening right now. The reality is that the Fed is not going to pivot. The inflation must come down. They are still going to raise interest rates, so gold is going to continue to go bearish. Either we come back to double top here with the data and the volatility brings gold up to grab some liquidity and then sell off from here, or we end up just getting some weakness from here. Going to be cautious at previous levels here because we may end up getting a bounce. But yeah, so the daily time frame is mixed because we are between this range of sell side liquidity and now buy side liquidity, right? So the daily is in this mixed range. However, the weekly time frame is still very bearish. Okay, so zooming in now to the 4-hour time frame, we are within a range. So I don't like the charts right now on gold just because of the range on the 4-hour here. You know, we got, I'm going to change this from blue because this is not a buy level. This is just a level in the market that's holding. So I would prefer to see sells. I'm still biased towards the sells, obviously. So I would like to sell either the retest of this high, or if we can have a clean break below this level and we have a new 4-hour bearish break of structure, well then I could retest these levels to take the sells. But right now there's no sells to be had at this level, only at the retest right here with confirmation of this new lower low and this break of structure to see that the sellers are actually taking over, that we have stronger sellers, and we fade out this last bullish move here. This move here gets faded out, and then we get the retest. Then I'll be looking for sells. But as the market structure shows me buyer and seller strength, right now I much prefer the GU chart because what I'm looking for gold is the break and retest. Well, on GU, we already saw that, right? We did see what I'm looking for, the break and now the retest. So I'm going to be focusing on GU based on the 4-hour structure confirmations here. And I'll be waiting on gold to see if we're going to have the sellers take over before taking a position. So that's it for today. I'm going to be back later for the recap and to look at the data and price action for the day.